It is August 22nd. It is a green day in the market and a great day in treasuries. Scott Riley, the market update desk. We got the much anticipated presentation speech from Fed Chair Powell at the Jackson Hole Symposium. And the Dow is up over 900. Treasury, the 10-year Treasury is down, testing 4.23 level. It's a great day across the board. Let's break down what was talked about, a little bit of what we expected, and that's why we're continuing some positive vibes across all the markets today. So Chairman Powell said that the slowdown in job growth, wow, isn't that interesting that they're finally acknowledging that, is much larger than previous believed just a month ago. We've been talking about this for months, clearly giving a nod to the big revision that we saw in last month's report. He also said that the downside risk to employment is rising, and if those risks materialize, they can do so very, very quickly in the form of sharply higher layoffs and rising unemployment. We've seen continuing claims continue to be elevated, so they're finally acknowledging that. He also believes that the reasonable case is that the effects will be relatively short-lived, and that, I'm sorry, in regards to tariffs, he believes that it's reasonable that the effects of tariffs will be short-lived and one-time shift in price levels, exactly what we've been talking about. But yet they've been talking about the other opposite of this, saying that it's going to continue, along with a lot of the media. They're now showing that that's wrong. Chairman Powell also said growth has slowed noticeably, about half of where it was at a 1.2% over the first two quarters. Bottom line was the policy is restrictive territory. The baseline outlook and the shifting balance of risk may warrant adjusting our policy stance, unquote. Clearly, they're foreshadowing a quarter point drop September 17th. They're finally acknowledging it. Now, there is a caveat that could derail things, and is the economic data that we'll be getting just ahead of that meeting. There's a PCE report at the end of the month. Then we get another CPI report next month. The jobs report on September 5th will be the biggest of those data points and going into potential revisions within that. Something that could help the odds of a rate cut, even if there's a strong jobs report, is the QCEW, quarterly census on earnings and wages. That's the benchmark revision data for Q4 of last year. Now, if you remember, quarter four of last year did see a very strong job growth, so we're likely going to see some significant downside revisions to that. Now, we also saw a lot of news regarding Fed Governor Lisa Cook. She has been accused of mortgage fraud, specifically trying to claim, at least what we're being told, two houses simultaneously being declared as owner-occupant dwellings. This is significant when it comes to mortgages, because it's one of the primary hot buttons of the CFPB is clarifying if a home is owner occupied, second home, or investment property, because there's significantly different pricing involved with each of those three. So if this is true, that's going to have a lot of negativity and some pressure on her to resign, or Chairman Powell to terminate her. And also you could potentially see President Trump terminate her for cause, and that gets into a lot of legal aspects. This is going to be significant because if she is removed, she would definitely be replaced by someone on the more dovish side in favor of rate cuts. She's definitely one of those vehement hawks that are on the committee. So we've got a lot of stuff going on there. On the technical side, this week we saw continuing claims elevate again this week, stay above 1.9 million. So we're watching that really close. Now, it's very interesting. All this time, we've talked about how the jobs reports were wrong and that it is not a strong labor market. The complete opposite of Chairman Powell of what he said. Now he's doing a 180, going, maybe it's not as strong as we thought. Well, shocker, if you dug through the numbers and went to the unimputed data, you'd see that it wasn't stronger. This is what needs to change with the BLS numbers and needs to be understood by the committee. So, on a technical basis, we're seeing a great day. Mortgage-backed securities have broke through their top resistance level of 101.76, it looks like, and we're moving quickly towards the next level of resistance at 102.09. The 10-year Treasury, as we mentioned before, broke beneath a very important 4.29 level, and we're sitting at about 4.24 right now. So we do have a little room to improve before we reach our next downward level of 4.20. Now we keep hitting that level of 4.20, not being able to break down beneath it because there is some room to run once we hit below that too. So bottom line, bonds have had a great run today and everything is reacting well to the chairman's speech. A lot of that was expected, but there needed to be validation of that through the speech. So next week's going to be a big one with PCE data. We'll keep on top of everything. We've already had one offer in today. We're working on helping that get accepted by the seller through our relationships in the industry. Give us a call, 616-293-2189. We'll help get the best loan for you.